Hi, it's Jane Slacksmith here, and I often get asked, especially for articles, that what are the costs of buying a property? And we kind of all concentrate on the deposit that we have to save and the stamp duty. Most of us know that stamp duty is an additional cost, but there's some other costs that you should be aware of. Now, obviously a deposit, most people believe that they need to put in a 20% deposit. The reality is that you can possibly put in less, but you need to pay mortgage insurance, and that's one cost that you need to be aware of. Now, mortgage insurance I see personally as an opportunity cost. I bought my first property with a 5% deposit. Now, it would have taken me another 2, 3, 4 years to save the money to actually buy that same property, and in that period of time it would have been worth a whole lot more. So it would have taken me a lot longer to save 20%, but I was able to access that property then with a 5% deposit, but I paid a lot of mortgage insurance. Now, mortgage insurance is a fee that you pay that protects the lender. So it's not really nice for them to pass on the cost, but the one concession they make is they let you put it on top of the loan often. So usually there's a limit to how much you can put on top of the loan. So if you go over a 95% loan to value ratio, some lenders won't let you capitalise the mortgage insurance premium. But obviously we talked to you about that. So mortgage insurance is a cost that you might have to pay. If you're going to pay it out of your pocket, check with your accountant, but that's a borrowing cost for an investment property, which is usually deductible over 5 years. So what other costs are you up for? Obviously there's loan costs, so you might be up for an application fee, a valuation fee, a settlement fee, a lender's mortgage insurance arrangement fee. Your mortgage broker may charge a fee. You might have additional fees that you just have to be aware of. You need to know those up front, and they should be disclosed to you up front. So you need to be aware of those fees. Now, often a lot of the lender's fees can be wrapped up in a professional package annual fee, but you need to understand if that benefits you. And the other fees that you should be aware of is pest and building inspections. You should just get this done, and this is really important, especially for houses. For units, you possibly would be best to start with a body corporate or strata report. Now, these reports can cost $250, and your solicitor can usually organise them for you. I'd suggest, if you haven't done one yourself before, that you get someone else to give you that report, that $250 report, so you can follow through what you need to research if you then choose subsequently to go and have a look at the strata manager's reports or information on that property yourself. Usually you have to make an appointment to do it, and you have to have the agreement from the real estate agent for you to access the strata management information. Now, I usually go back and look over 10 years of information, so I can get a really feeling for what's happening in that strata complex. So if I want to do renovations, obviously I'm looking for problems where the body corporate has refused renovations to be done. I'm looking for any issues with pests. I'm looking at any works that are planned. Now, this is an interesting point. I actually once had a pest and building inspection done on a unit in Maroubra in Sydney, and it came back fine, but obviously there's only so much that they can look at. I subsequently got the body corporate search report back, and it showed that due to concrete cancer in the roof, in the next 6 months there was a special levy of $100,000 per unit to cover the $2.1 million needed to make that property livable again due to the concrete cancer. Now imagine if I didn't know about that. So that kind of explained why I got the property. They accepted the lower offer straight off. So you need to be aware of these additional costs. There are costs also associated in getting insurance. So lenders will require that you have insurance over the building. For houses, have insurance over the building arranged prior to settlement. So be aware that you need to get a cover note and have them named as mortgagor to the amount that they want specified for the building on that insurance cover. So that's another cost you need to be looking out for. Look, there's so many things that can cost you money. You're going to be concentrating on the deposit. You may look at lender's mortgage insurance. There could be loan application fees. The big number is obviously stamp duty. And if you're strategic about how you buy properties, and especially if you're buying an investment property rather than a home, you might look at buying in states or territories that have a lower stamp duty, that obviously are experiencing growth and fit into your property investing strategy and your buying criteria. A little bit about land tax later, because there is some opportunities in minimising that, but that's the additional costs after you've bought a property. So be aware of all the costs that you need to pay for as part of buying a property. Obviously, you're going to need a solicitor and conveyancer. They range from $600 to $2,000. They usually charge for searches on top of that, title searches. And look, you really need to have this covered because, there might be maybe a lien against your property. I've seen some contracts where the RTA has a compulsory acquisition of the bottom of someone's garden in the contract. So you need to have a professional look over these contracts so that they can actually bring this to your attention. In addition to that, you might be up for some additional fees such as disbursements, and often these shock people, and you usually only find out about these 3 to 5 days before settlement. Now, so obviously if the owner of the property has prepaid their rates and prepaid their water, etc., then they're going to want their unused portion of that paid back to them, and that's a disbursement. Now that could quickly add up to $1,000, especially if they prepaid their strata fees for the entire year. So just be aware of that, and be aware that usually your solicitor or conveyancer is going to give you 3 to 5 days to turn up with a bank cheque at their office in time for settlement. So you need to be aware of how much you need and how much you're going to have to pay them. They always slip in their account at the same time, so they're paid at settlement. Anyhow, that's pretty much all the costs that you really need to be aware of straight up front for your property purchase.